Hello everyone, and welcome back to the Ultimate Trading Podcast for beginner traders. I'm Isabel Maria, and today we're diving deep into one of my favorite strategies, momentum trading. Momentum trading is one of those approaches that can feel electrifying and a little intimidating at the same time. It's dynamic, it's fast-moving, and it's all about riding trends, knowing when to hop on, when to ride, and when to get off. By the end of this episode, you're going to understand not just the mechanics, but the mindset, the discipline, and the practical workflow required to apply momentum trading successfully in real market conditions. Momentum trading is, at its core, a strategy that capitalizes on the continuation of existing market trends. The principle is deceptively simple: assets that are moving strongly in one direction are likely to continue in that direction for some time, driven by both psychology and market forces. Investors and traders alike tend to pile in when a trend is visible, creating self-reinforcing momentum. That's what we're aiming to capture. Now let's unpack what this looks like in practice. Momentum traders look for securities that are either trending upwards or downwards, and the goal is to ride that wave. You're not predicting a reversal or speculating wildly, you're acknowledging the market's current energy and strategically positioning yourself to benefit. But the devil, as always, is in the details. Success in momentum trading requires precise trend identification, understanding entry and exit points, interpreting volume, and deploying the right technical tools. Let's start with trend identification. Imagine you're standing on a crowded trading floor, watching thousands of participants react simultaneously to every tick of price. Your task is to see the pattern in the chaos, to recognize when an asset's movement is more than noise. I often tell new traders that a trend is not just a line on a chart, it's a reflection of collective behavior, market psychology, and capital flows. You're looking for strength, consistency, and evidence that the movement is likely to persist long enough to make a trade worthwhile. Tools like moving averages, both simple and exponential, are invaluable here because they smooth out noise and highlight the trajectory of price over time. Timing, though, is just as critical as trend recognition. You can spot a strong upward trend, but if you enter too early, you risk being caught in a short-term pullback. Enter too late, and the momentum might already be tapering off. This is where technical indicators like the Relative Strength Index and MACD come into play. The RSI helps you understand whether the asset is overbought or oversold, giving you a sense of whether the trend can continue. MACD, on the other hand, allows you to see shifts in momentum through moving average convergence and divergence. Both indicators, combined with a careful look at trading volume, create a clearer picture of when to enter and exit a trade. Now I want to share a story to bring all of this to life. Let's talk about Alex, a trader I've followed closely. Alex started his journey in value investing. He loved analyzing fundamentals, understanding balance sheets, and projecting long-term growth. But he quickly realized that value investing didn't give him the short-term opportunities he craved. He wanted to capture the energy of the market, to ride trends, to see results in days and weeks rather than years. That's when momentum trading caught his attention. Alex approached this strategically. He didn't jump in blindly. He studied principles of momentum trading, read resources like the Ultimate Trading Guide, and developed a structured plan. He began with trend identification using the 50-day and 200-day moving averages, searching for assets where both were rising, a clear signal of sustained upward movement. But he didn't stop there. Entry and exit were determined with precision, the RSI between 30 and 70 to avoid extremes, MACD line crossovers for confirmation, and a trailing stop-loss to lock in gains while still allowing the trade room to breathe. The story gets really interesting when we look at implementation. Over 6 months, Alex monitored the markets daily, analyzing trends and executing trades based on his criteria. One particular technology stock stood out. Its 50-day SMA was consistently above the 200-day SMA, MACD had recently crossed above its signal line, and volume was surging. Alex entered the trade at $50 per share, setting a trailing stop-loss at 10% below his entry. Within 3 months, the stock climbed to $70. His trailing stop-loss ensured he captured most of the gains, and he exited at $68 per share. That's a substantial return achieved not by luck, but by disciplined observation, technical analysis, and risk management. This case illustrates an essential point about momentum trading: it's as much about controlling risk as it is about chasing profit. The trailing stop-loss strategy allowed Alex to stay in the trade without exposing himself to a sudden reversal. And it's a good reminder that no matter how strong a trend seems, the market can turn on a dime. Psychological discipline here is paramount. You need to trust your setup, follow your rules, and avoid the temptation to deviate because of fear or greed. I want to touch briefly on breakouts, another key aspect of momentum trading. Breakout trading is all about identifying support and resistance levels and positioning yourself to capture the surge once the price breaks through. High volume is critical here. It validates that the breakout isn't a false signal. In Alex's case, he used this approach to enter positions both long and short, confirming momentum through volume surges, which is a nuance often overlooked by beginners. And let's not forget the human element. Momentum trading can be thrilling, but it can also be mentally exhausting. You're constantly interpreting data, watching for signs, adjusting your stops, and managing risk. A losing streak can test your confidence. Alex faced this too. Early in his momentum trading journey, he mistimed entries, ignored small pullbacks, and took losses. But each time, he reviewed what went wrong, adapted, and refined his approach. He learned that momentum trading isn't about perfection, it's about process, learning, and consistency. As Tudor Jones once said, the secret to being successful from a trading perspective is to have an indefatigable and an undying and unquenchable thirst for information and knowledge. Alex embodied that principle. So what practical takeaways can we extract from this? First, stay informed. Market news, economic indicators, and company-specific developments matter because they influence momentum. Second, rely on multiple indicators to confirm trends and avoid false signals. Third, define clear entry and exit criteria and stick to them. Impulse decisions are your enemy. Fourth, implement strict risk management through stop losses and position sizing. And finally, review your trades regularly, adapt your strategy, and embrace the learning curve. Momentum trading is dynamic, and your approach must be adaptive. As we wrap up today's episode, I want you to reflect on this question: when you look at your trading journey, where do you feel the greatest challenge, timing entries, managing risk, or keeping your psychology intact during volatile momentum swings? Take a moment to think about that and leave a comment sharing your thoughts and your plan to overcome it. Momentum trading is a strategy that, when executed with discipline, insight, and patience, can unlock consistent profit potential. But remember, it's not just about the trend. It's about you, your analysis, your process, and your ability to manage risk. Focus on that, and the momentum will follow.
Thank you for listening to the Ultimate Trading Podcast by Bells Forex AudioWorks. If you love this episode, hit follow, leave a quick rating, and share it with one trader friend. It really helps. Right now, head to bellsforex.com/tools. 6 professional-grade trading tools, 100% free, no sign-up. Use them on every trade. They're that good. Full guide is free at bellsforex.com or grab the Kindle version on Amazon. Until next episode, trade smart, stay disciplined, and keep building your edge. Happy trading!